Hey there traders, hope you guys are doing well. So I'm very excited for this video that I'm about to make, and I just want to show you guys something very interesting. I've been implementing this more and more into my trading as the months and years go on, and I just wanted to show you guys and just bring it to my channel just because it's such an interesting concept. So what it's called is it's the profit zone stop loss. So you can use this instead of using a regular stop loss. So how we are taught normally to put our stop loss, let's just say for example we are Fibonacci traders and we go from the swing high to the swing low, and now we see a pullback over here to this level here, and we decide now to go short based off that pin bar. Okay, typically what a trader will do is they will, for example, put their stop loss like this, put it just above the high, and then target the low. Okay, so what if there's a different way to actually do this and actually profit from your stop loss instead of having a regular stop loss, and at the same time also have a nice wide stop loss so that we can allow for, as you can see over here, the market actually pushed up, took out these guys, and then there was a big move to the downside. So how can we actually profit from our stop loss and also get into this move as well, giving us a chance to actually catch this move? So I'll remove the Fibonacci, and what I'll now do is, as you can see over here, let's just say we decided to enter here, and let's just say we realize we have to trade with a wider stop, so let's use a 25 stop loss instead of which this was basically an 8 or 9 pip stop loss. And now we're going to increase that to 25 pips. You're still going to be targeting the low. Now as you can see, this is a 1 to 1.5 risk to reward ratio setup. Okay, now but the problem is the stop loss is really wide. So what I do is I want to actually profit from the stop loss instead of just, I don't want to actually use this entire stop loss. So what I'll actually do is I'll put a buy stop above the high of this candle. Alright, so as you know, this is a sell. Currently we'd be in a sell, right? But I would put a buy stop at just above the high of the candle that we've entered on. Okay, then the buy stop take profit will be about 10 pips. Okay, and the stop loss of the buy stop will be at the exact level of the take profit of the sell. Okay, so as you can see over here, if we measure up to here, okay, we'll actually widen that a little bit more, so it's about 8 to 10 pips. Okay, so now if we measure the buy stop, you can see that's around 10 pips. So what actually happens is the market will, as you can see here, it went in our favor, but then it pushed up. Okay, and then normally this whole thing would be our stop loss, and we'd be stopped out for 25 pip. But now because we've added in a buy over here, we've actually reduced our stop loss now to 15 pips, because this profit zone over here is 10 pips and the overall stop is actually 25 pips. Okay, so typically what's going to happen is the sell may go in our favor for a little while, and as you know, they always come up into your stop loss, so the buy stop is going to be triggered. Okay, and as it moves up, the buy stop is going to make us 10 pips, and then it's going to actually close out. And then we are hoping that the price then continues to fall lower and actually hit our take profit. Remember, the whole buy order will be closed out as soon as it hits the take profit of the actual buy. Okay, so that's scenario one. What could also, the ideal scenario is that price just moves directly to our take profit. Okay, so the first scenario was positive as well. The second scenario is ideal. So we've got two positive scenarios going on here, okay? The third scenario is that price just hits the buy stop, continues upwards, closes out the buy stop. So we've made 10 pips. And then ultimately hits the stop loss of the sell. In that scenario, we've lost 15 pips in total. But at the same time, we've we've profited from the actual stop loss itself. So this drastically reduces your risk, and also allows you to actually profit from your stop loss. So ultimately it's going to look like this. Let's just move that over to here. So basically the entire order is going to look like this. So I hope you guys are following. If you need to rewind that and actually to go through that again to understand it, but it's a pretty basic concept. So we have three scenarios. Either price goes straight to our take profit, because we still have room over here. We still have about 10 pips of room over here for the actual sell trade to work out initially. Okay, if it doesn't work out, we are actually going to profit from our stop loss. Okay, and at the same time, if price decides to reverse as soon as the buy trade is over, then we'll be basically making profit from this point. We'll be making profit all the way down. Now you can also close it out earlier, but it's always good to stick to your targets and actually aim for that full target. And the other scenario is that, well, the third scenario is that it just goes straight up, goes through the buy and then hits our stop loss in that case. But you see, well, in that case we've lost only 15 pips out of this whole stop loss. But the point of this is that now we have an ultra wide stop loss that gives the market a lot more room to breathe, and at the same time we actually profit from that wide stop loss. Okay, so it's hugely beneficial. There is a fourth scenario, which is basically which will happen as well, which is basically the price will, for example, push up, okay, like this. It'll tag into the buy, and at this point we'll be in a hedge, and we'll be only down 10 pips. Okay, we'll be down 10 pips, but we'll be hedged. Okay, then price will come down, so it'll basically miss the take profit of the buy, but now we are stuck in a hedge. But now at the same time we are only stuck in a 10 pip loss. We are only stuck in this loss over here from here up to here, which is basically, okay, 8 or 9 pips. So in that scenario, if you can see, okay, it hasn't tapped the take profit of the buy, then and it starts coming to your entry, then you can just close out both trades quickly and you'll only take a small loss. So it's a very dynamic way of using a stop loss. It actually takes away the fear of using a stop loss, because now you know, okay, I'm actually going to profit from the stop loss. There's a lot of people get irritated with using a stop loss and actually hate using a stop loss. So in this scenario, we are actually profiting in the stop loss. It just brings a positive outlook, or a positive mindset towards an actual stop loss, because the stop loss is just a regular stop loss is just irritating, because no one wants to sit through a whole stop loss and not even make profit from it. A whole stop loss, you can actually widen your stop loss, and as I'm showing you, and actually take a profit from it. And what this also does is it also increases your risk to reward, because if you look at this, you can see a regular stop loss here would have been a risk to reward ratio of 1 to 1.5. Now if you are using this, we are shaving it down now. The stop loss is actually only worth 15 pips and not 25 pips. So if we look now, if we bring this down to 15 pips, you can see now that the actual stop loss at 15 pips is now 1 to 2.5. That's a 1 to 1 is to, sorry, it's a 1 to 2.5 risk to reward ratio. That's a very, very beneficial to actually use this. I don't hear about it spoken of a lot in the trading space or the YouTube space, but it's just something I tend to use, because I don't like tight stops. Tight stops never work in the market. Okay, let me just remove all this. because as you know, tight stops just don't work in the market. It's just, if you constantly trading with an 8 or 9 pip stop, you're just constantly going to be stopped out, and it's just going to be annoying. Because as you can see over here, you have a lot of areas, a lot of the time in these areas where price is bouncing up and down. So we can even extend this. You can see quite often, for example, if you took a setup here, this here would have stopped you out. If you took here, this here would have stopped you out. If you took a trade here, this liquidity grab here would have stopped you out. So, and with using the profit zone stop loss, you can actually win a lot of these trades and actually also profit from the stop loss. I hope this video helped, guys. I hope it gave you some ideas. It's just a different way to use a stop loss. It's quite interesting. You can get some insane risk to reward trades. You can also lower your risk, because remember, profitable trading is all about finding ways of lowering or reducing your risk and increasing your profit targets and your risk to reward ratios. Okay, that's basically, the more you focus on that, you'll naturally be more profitable, because that's just how it'll work out sort of mathematically. Okay guys, hope this video helped. Leave some comments down below if you found this interesting. Hope it helps your trading to some degree. Catch you in the next one. Peace out.